Thank you so much. Welcome to the Tom Style Show. Thank you so much, folks, for joining us today. We are so excited. We got Bridger Pennington, the man, the myth, the legend. The thing is, in the world of high finance, there's people that I know and everybody knows, but you cannot really relate to them a lot. You don't look at David Rubenstein, you don't look at Ken Griffin, and you're like, oh yeah, I can relate to that right away. But then I found Bridger, and this is a man I can relate to. I can feel comfortable. He makes things super simple. And he's a good teacher. Whatever he would be teaching, he can break it down, simplify it, and make it very, very easy for you to implement in your own life. So, I found that, and I got introduced to him through a few mutual friends. And, it's an absolute honor to have Bridger with us today, because he can teach you all about starting your own fund, the world of fund management, how you can be a fund manager, how you can scale. Fund management, a lot of times I think, throws people off, like, oh, okay, fund management, why would I be managing money and all that? But the thing is, without the funds, it's almost impossible for you to scale. And it's a very different approach, whether you get a venture capital or that you have to give out equity, or the fund route. If you take that, you can actually get a lot done without giving out a lot of equity. But, I just talk too much sometimes. I got to shut up today. And I'm going to let Bridger talk. Bridger, welcome to the show. It's an honor to have you. Bridger, first of all...
Tom, good to be here. Thank you for having me. This is amazing.
Thank you. First of all, Bridger, how did this all begin? Where did this start?
Yeah, I'll take you through my story just briefly. I don't want to bore your audience, but we'll go fast. Cut me off whatever you want. But sure. I grew up in a pretty normal house. I'm from Salt Lake City, Utah, and now we've ran multiple funds. We have 36,000 students around the world that we teach funds to. We have multiple. We have one fund over $1 billion, 5 funds. These are student funds over 100 million each, 54 student funds between 1 and 50 million that have launched out of our group. We launched 120 funds last year out of our group, which is just crazy to think about, like how many people, like regular people like me and you, that are launching and scaling funds and growing these funds. And these funds are some are in real estate, private equity, venture capital, hedge funds, crypto funds, almond farm trading funds that go out and buy and sell shipping containers from China to Brazil funds. Like it's pretty remarkable type of groups that we talk about and work with. And so it's pretty fun. And I've been fortunate enough to run 3 funds myself, and currently running a hedge fund right now. And so it's been kind of this cool dynamic, but, sorry, I digress. So let me take you back a little bit to kind of how we got into this and got going. And feel free to cut me off whenever you want, but because I'll get long-winded. But I was in I grew up in a pretty normal house. Went to college, was super ambitious. So I knew entrepreneurship was like the key to making money and wealth and living my dreams. And so I started 6 businesses my first 2 years of college. And they were just like any business that you'd see on YouTube or whatever. So I started a Chinese tutoring business. So I speak Mandarin Chinese. I started a 2-year LDS mission in Taiwan. I speak Mandarin Chinese. So I did Chinese tutoring. We had like tutors. I wholesale 2 houses. I was flipping houses. We built websites for people. I had this other little startup we were doing. And I was kind of like a chicken with my head cut off. I had all these different business ventures going. And finally, my dad grabs me and he's like, Bridger, I want you to go meet with one of my business partners. This guy can really help you out. I said, okay, yeah, I'll go meet with whoever, And I knew my dad was an entrepreneur, but I didn't have a full scope of what he did. And so I went and met with this guy. I pulled this guy's house, beautiful home, gated community, white house, got the cars in the garage, the basketball court, the pool, like everything. And I was like, whoa, this guy's legit. He's like, and I walk into his house and I come in, it's like grand piano, beautiful white furniture, just beautiful home. And I come and sit down on his couch, and I'm 20, I think I was 21 years old at the time. And we started chat, and I started talking about business entrepreneurship. And finally I asked him, how did you get all of this? Like, how'd you do this? Like the whole thing, like how'd you make so much money? Like, what'd you do? And he goes, funny enough, Bridger, not a lot of people ask me that question. And I was like, oh shoot, like that's the first question I had was like, how'd you do this? And he's like, he's like, oh no, it's fine. Like, I'll tell you. And he goes, I was a lot like you in my 20s. He goes, I chased around a ton of different businesses, business models. I tried, and actually I made a decent amount of money. But then he goes, then I met someone he was a relatively young dude. He was one of the wealthiest guys I had ever met. And he ran a private equity fund. He goes, I didn't even know what private equity was at the time, but he goes, I didn't care what it was. It took me 1 year, 5 years, or 20 years. He goes, I was going to figure out what a fund was and how funds work and eventually run my own fund. And he goes, this is the secrets of the ultra wealthy. the ultra wealthy families of the world, they get their kids into the best universities. They want them to go work on Wall Street, hedge funds, private equity, venture capital, real estate funds, or come back home and run the family office. Yeah. And a lot of wealthy families push their kids into doing this. And so if you look at the Vanderbilts, the Romney family, the Trump family, the Bloomberg family, whatever family you want to look at, a lot of those are political families, but a lot of them are in funds. And so he said, I was going to figure this out. And he said, that's what we did. He goes, a number of years ago, me and your dad and a couple other partners started a fund. And we currently manage over $8 billion of real estate. Now, to put that into perspective, a lot of people online, you guys follow like Grant Cardone, right? Yeah. That's 2 to 3 times bigger than Cardone Capital is today. Now, that was years ago. Today, they're over, I think, 40-something billion dollars they manage. They are literally 10x Grant Cardone's fund size. Same kind of asset classes, multifamily, commercial. They're literally 10. They're top, just incredible firm. And I was like, whoa, these guys are insane. And I was sitting there with this guy and I thought, I've always heard from podcasts like this, like find a mentor, like find a coach, right? So I asked this guy, like, hey, can you coach me? Like, can you be my mentor? And I'll show up early. Like I'll bring you coffee, whatever you need. Like I'll do it for you. Just teach me. And he's like, Bridger, go talk to your dad. He's like, your dad's way better about this than I am. And I said, no, we live in a smaller house. We're kind of broke. Like, I want to learn from you, dude. Like, you're the guy. And I come to find out, he's like, Bridger, me and your dad make about the same amount of money. And I was like, huh? Come again? And he's like, yeah, me and your dad are pretty much equal business partners on this business. And I left the dude's house. I just drive straight to my dad's house. I'm like, Dad, what the heck? Like, what's going on? Like, why haven't I been able to order a soda at Chipotle for the past 10 years? Because it's too expensive. And yet you're managing, this huge fund. And just to give you back, my dad drove a car with a dent in the door for years. He lived in a pretty moderate house. He didn't spend money. We didn't go on vacations. Like, it was just it wasn't bad, but it wasn't miraculous by any means. And it was just pretty normal kind of kid life. And for me growing up. And so anyways, yeah, come to find out he's managing this multi-billion-dollar fund. And feel free to cut me off whenever you want. But I started to every Sunday night, I'd go to his house, started to teach me about funds. And so I'd go to his house and we'd sit on the whiteboard and he would teach me how general partnerships work and limited partnerships and the SEC and compliance and Reg D funds and Reg A funds and Reg CF funds and how they're all put together and just all the intricacies of funds. Yeah. And what was, it's funny thing about life is when you start to learn about something, you start to recognize that thing in your life. Like when you buy a new car, you start to see that car everywhere, right? Mm-hmm. And so I started to recognize funds in my sphere and in my life in ways that I could even start a fund. So at the time I was in college, I was working an internship and getting a paid internship at a company that was local, a startup. And we had this idea that we could start a fund to finance clients that were coming into this business. They needed financing. And so I was like, let's do a little fund. So I put this little fund idea together. We got together with the business owners. They loved the idea. I took it to my dad. He loved the idea. And we kind of mapped out this idea for a fund. And I'm in college. I'm 22 years old. I'm like, dude, this is going to be sweet. I'm going to launch a fund. It's going to be amazing. Yeah. And then I hit this wall, like, shoot, how am I going to raise money? And for whatever reason, I just overlooked, like, that's the biggest piece of a fund is like the investors. Like, and he said, you need to learn how to raise money on your own. This will be a crutch that you'll never be able to recover from. Your first investor is your hardest investor to find, and you need to do this on your own. And he kind of kicked me out. I walked out with my tail between my legs a little bit. I was like, shoot, man, my dad doesn't believe me, right? But I walked out and I said, you know what? I'm gonna take him up on the offer. I'm gonna do this. And I went out, and at 22 years old, I talked to everybody I knew, former bosses, college professors, anybody, and I raised a whopping $49,500 from, like, I think it was 6 or 7 investors. And it was just teeny, like this micro teeny fund. That's like, if you guys know anything about funds, that's the smallest fund to probably ever launch. But it was enough to get started. We were doing these loans that were like $1,000 to $8,000 a loan. And so it was awesome. They're turning fast. We launched that first little fund. The first group of investors, we got them a 64% return on their money, which was phenomenal. Wow. And we then flowed that into our second fund. And it was the same strategy. We just restructured some things. We raised and deployed millions of dollars out of that fund. Did incredibly well. I think our returns were 62, 47, and 36% cash on cash return for that fund. Ran it for 3.5 years. We had a competitor come and buy us out. So I exited a fund. I sold the whole fund. It was amazing. Got a good little exit on it. And then And then now recently we just launched just my third fund, but it's our first fund in cryptocurrency. So we have a hedge fund that trades crypto. I have incredible partners that are amazing in crypto. We just raised $10 million on that fund on our initial launch, and it's been amazing. So since then, started to wrap this whole story together. My dad runs a big fund, and my brother is a securities attorney at one of the largest law firms in the world for funds. And so between the three of us, we have some pretty good insights into funds, and none of us went to Ivy League schools. None of us went to Wall Street, but we have, we've worked on some pretty massive funds. And my brother is chief compliance officer of an $800 million fund, just really cool stuff. And so people started to ask us how to do this game. So we started to make videos and podcasts and eventually a course. And then we threw let's throw big events. We threw a big event last year called Fund Launch Live. We had 1,200 people there live, which was amazing. We now have 36,000 students around the world that have taken our course and gone through and learned about funds. We now bring in fund managers from all over the world to come teach how funds work and how they're put together. And we kind of, accumulate all this knowledge into one spot. It's our company called Fund Launch now. And we help, like I said earlier, we've launched 120 funds just last year out of our group. We help people launch funds now. And we're now a partner on it's going to be 11 funds by the end of this month. Of student funds we now partner with that people come and offer it. They want us to be on their board and sit on their fund. We take small stakes, but so it's just an incredible business, and I just love it so much. It's just so fun. So anyways, I'll pause there. I'll let you talk, but that's kind of the story of how we got in this game and what we're doing now. And it's just, we're growing, and it's really fun. It's a fun spot to be.
Bridger, wow, that's so inspirational. This is, I heard part of the story before, so I was, but every time I hear it, I'm like, wow, this is something. So Bridger, the thing is, the way I think about it, I think you're the bridge between the Wall Street and the Main Street. You are kind of democratizing the secrets of fund world, and you're giving the secrets out to the Main Street, to the everyday folks, and telling them how they can scale their operations, how they can open a fund. Now, so there are two things. You're also managing your own funds. So you're a fund manager. At the same time, you are an educator, or in the instructional space, right? The education space. Which one do you love the most?
That's a good question. I like both for different reasons. I love the game of running a fund and being a fiduciary. And I have incredible partners to help me run these funds. I don't want to take credit for myself. I have incredible partners that help me run both businesses. And so I'm 50-50 partners with one partner on my fund and 50-50 partners with my other partner on Fund Launch. So I have two great partners on different businesses that help me run everything. The fund is really, I really like the game of markets and seeing where we can find niches and find asymmetrical risk and, mitigate downside risk while we produce a high yield to our investors. It's something that excites me and something I want to get better at. $10 million on our initial launch for this fund has been awesome, but we hope we're in the game right now. I hope to we're in $100 million and even $1 billion fund in the next, decade here. And I love the challenge of that. On the other side, Fund Launch, that's where we teach about funds. I get a lot of fulfillment from that side, where I really feel like we're helping people. We had a guy at our event last year come up to me, and he was literally in tears. Grown man. He's like, I think he's like 55, 60 years old. This guy came up, and he's like in tears, and he said, Bridger, I want to thank you so much for going out and doing this and assembling. And I don't take credit for all the stuff we do in our student stuff. I bring together the knowledge of incredible mentors and coaches from around the world into one spot. But he said, Bridger, I thank you so much for doing this. This has changed my life. And now I'm teaching my kids and my grandkids this, and they're getting in the fun game. He's like, this is going to change my life for generations. And he was just sobbing, and he gave me this big hug. And I was like, wow, this is, it's something to, follow. And I felt like I was kind of called to do this. Mm-hmm. I felt I had multiple promptings. I'm a God-fearing person from God to go and start this business and to move into this space. And it's not easy, as it's kind of hard sometimes to put your face out there on social media and make videos. And some days I'm like, dude, I'm just done. I don't need to do this. I don't need to make videos and post about something. But I feel like it's a calling a little bit to go out and change this industry and let more people have the same access to what I had access to. I had access to an incredible dad and father who taught me all this stuff. And I thought, man, if I got that, I think other people should have the same opportunity as well. And so, yeah, it's pretty fun. So I get a lot of fulfillment from Fund Launch. And we still make money on Fund Launch. No question about it. But the hedge fund, I think, is kind of the most potential to make tons of money and go change my world financially. Fund Launch is my way of having tons of fulfillment, giving back, and changing the world in a different way. So both work in tandem really well together.
Wow. Yeah, this is, if it wasn't for you, I'm a big fan of David Rubenstein from the Carlyle Group. I watched his interviews, and that's the reason I started my own interviewing, because I watched it so much, and it's so funny and just so charismatic. So I said, I got to start my own interviews. And then I watched you. And I was like, wow, he's so good. Whenever I watch you, I feel you were the next, the Wolf of Wall Street movie, the Jordan Belfort, right? He has his own channels and all that. He can speak very fast, and you are almost as fast as.
I hope I'm not the next Jordan Belfort to be.
No, not in that way.
It's so funny. I have never seen that movie all the way through.
Oh, really?
I've tried to watch it 2 or 3 times, and it was just a little too much for me. But anyway, sorry, keep going. I cut you off though.
Oh, no. That's totally fine. So the other thing, I wonder, you were running a couple of funds, but your family's entirely involved in so many funds. Your brother is a securities lawyer. Your father is, he was part of the real estate fund, the multifamily, things like that. But you are going into crypto. You're going into debt fund. Why not real estate?
It's funny. My expertise currently, at least, is I don't claim to be an incredible investor at all. I'm a pretty average investor. But I'm really good at running funds and I'm pretty good at raising capital and structuring funds and compliance, stuff like that. So what I do is I go partner with good operators, people that are really good at crypto or multifamily or whatever. So, I would love to be in a multifamily fund. I've been offered to be in a couple of them. We're now taking small pieces of a few multifamily funds that people want us to consult on and be a part of. But at the same time, multifamily is very saturated. There are hundreds of funds that are in multifamily that are frankly better than I think I would do. They're more compliant. They're better, well run. They're just better structured. Like my dad's funds, one of the best funds in the world. Mm-hmm. And so I was like, am I really going to be serving investors in that niche? Maybe. But in our the crypto space, we've taken a totally different approach to crypto. We don't day trade. We have a very risk mitigated portfolio. We mitigate downside very hard, and we just leverage upside. We're a long-term hold type of fund, and it's a unique product. We're very compliant. We follow all the tax codes. We have third-party audits, admins, all that kind of stuff, which pretty much no one else has. And so when you think about red ocean and blue ocean strategy, if you guys have heard that concept of red oceans are bloody waters where there's lots of competition, blue oceans are brand new. It's a lot easier to gain advantage there. We saw a crypto hedge fund as a very blue ocean opportunity, especially if we can bring like compliance and third party audits and stuff to that space, which a lot of people don't have. We shine like a shining star versus maybe multifamily. We've done that. People have been doing that for years. And I don't know if we'd have a strategic really an edge over other multifamily operators around the country. So that's a little bit of it. Is more, finding a good opportunity. And then I also had 2 incredible partners, one specifically over there on that fund that, that was just what they're good at. And so I decided to partner with them.
No, this is incredible. The crypto, I was also very interested in that space. It was very exciting, especially the blockchain side of it. It was super, so many talented developers in our company. Some of our software developers, they even quit their job to start developing in blockchain because they still believe that it's the future of the internet, just like what internet was when Google and Yahoo and all these guys came along. I think blockchain would do the same, and they are still doing that. I'm an investor in a couple of the crypto startup space. Now the thing is, I was very bullish on that. But then the SBF, the FTX, even Silvergate and all these collapse and all. I'm a little bit confused now as how to approach the world of crypto. I just want your thought into this. Like, how do you think about it?
Yeah, it's funny. I'll tell you a quick story and then we'll dive in. So my dad, when they were running real estate funds, it's like 2009, 10, 11. Okay, he'd had friends call him up and they're, John, hey, we're so sorry. I just wanted to let you know I'm here for you, man. I love you. I heard you're in real estate, and I know it's been a tough time. I just want to let you know I'm here for you, man. I love you. I know it's been a tough time for you. And my dad's like, what are you talking about? He's like, well, I've heard the market's really down. A lot of guys are hurting. I just want to let you know I'm here for you, man. I love you. And my dad's like, yo, this is the best time ever to be in real estate. What are you talking about? He goes, we are so excited. You can't even believe we are buying deals at the best prices you've ever, like, I have never been so excited in my entire life right now. Like, we have a fund, we have hundreds of millions of dollars, and we're buying up the cheapest deals you can imagine. This is the best time ever to be in real estate. And they were like, oh, I guess that's right. Like, in the last 100 years, you couldn't pick a better time to be in real estate than 2010, 2011, And they were like, that's interesting, And I feel like right now with crypto, we have a similar thing. People are like, man, Bridger, you sorry in crypto? We're like, no, dude, our fund. So we were in, so a good test of a money manager is not how they do in the up market, but how they do in the down market. Once since during our whole fund launch and deployment, markets fallen like 50 to 70%, right?
Yeah.
And we performed really well. Our fund did really well. And we are now buying all these same assets at huge discounts. And even with Silvergate, SBF, all that kind of stuff, Bitcoin bottomed at what? 18,000, 17,000 in that range. I mean, you couldn't get, that's about the worst press you can get on an asset class. And it's still doing good, like moderately, right?
Yeah.
And we're like, this is pretty interesting. Now, something interesting that's happened as well. So the same week, SBB or there we got all these acronyms. Sam Bankman-Fried. Okay. The same week they blew up this last November, the Fed, New York Fed, with Citigroup, Wells Fargo, and a bunch of other banks announced a 12-week digital dollar test. Did you see this? So they announced this last November, and they've already just finished it. They're now doing a 12-week digital dollar test that they now just finished. Additionally, there was a $54 billion CHIPS Act passed last summer. Yeah. My business partner, Dan, is on the board of Intel. He's been on the board of Intel for 15 years. And he thinks what they're doing is they're domesticating chip manufacturing in the United States.
Yeah.
But he's like, additionally, he goes, I believe, this isn't public information, but he goes, I believe that they are building the infrastructure for a central bank digital currency. Additionally, you saw 3 banks blow up last week, right?
Yeah.
You had SVB, you had Silvergate, and you had Signature.
Yeah.
3 of the biggest, pretty much only crypto banks on earth. They're now all in government control, right? And so again, we don't know what's going to happen, but if you look at, they're building huge manufacturing and data centers in the United States. You have a 12-week digital dollar just tested. President Biden last year put out an executive order about a year ago saying we are now going to research and start going into potentially developing a central bank digital currency.
Wow.
If that happens, and what a central bank digital currency, that would just be a digital dollar or a coin version of the dollar. China already has one. 13 other countries already have announced plans for a central bank digital currency. So if that comes out, I mean, it's kind of like, it could be just coincidence or it's the perfect storm. Mm-hmm. You have some fraudsters get blown up. You take over the 3 largest banks. You launch a 12-week digital dollar request, and maybe you're building infrastructure for a central bank digital currency. So if that happens, in my opinion, all ships rise. It would onboard trillions of dollars into crypto. It'd be the on-ramp into crypto. And everyone would have a wallet to be using that. I mean, we already do all of our transactions digitally anyways. And now it'd just be like one more layer of control and protection from a government. And they'll do it in the name of, tax evasion. They'll do it in the name of, there's all these people that do like, they pay people under the table or drug deals. All of a sudden it's all tracked on your phone. So crypto right now, we have, if you look at the last, and I could pull up a chart, but the cycles all the way since 2011, we usually have a huge run up, about an 80 to 90% sell off. And it takes about 6 months to about a year and a half to recover. And then huge run up, sell off 80%, about 6 months to a year to recover. 2017, huge run up, and then it recovered. We've had a 79% drop from the high. We are about 380 days since the sell-off. All the crypto billionaires from last cycle didn't buy at the top. They bought when it was kind of cheap. Yeah. So we are prepping very hard right now for this next run. If it's coupled with a central bank digital currency, it's like gasoline on a nuclear bomb. I mean, the total market cap of crypto is only $1 trillion right now. Yeah. It's only $1 trillion. That's less than the size of Apple. That's like half the size of Apple. It's like half the size of Amazon. It's less than the size of Microsoft. It's like the whole industry is less than one tech stock. And so if you look at that, it's like, that's why people keep saying we're still early. We're still so early in this space. 1 in 4 developers right now are going into Web3 and blockchain technology. 1 in 4
that is correct.
Developers. Yeah. And so it's like you don't get 1 in 4 developers going into an industry and not some really cool stuff coming out of that industry. You know what I mean? Yeah. And so and again, we say all this, it's all cool. Even if that doesn't happen in our fund, we do liquidity pools and yields and stuff. We still make yield on all of our stuff, but that's just like, it's just gasoline. It's a tidal wave of capital that's moving. Yeah. And if you're going to do what everyone else did on the last fund, you wait until it runs up and then finally you get it at the top and then it sells off. It's a pretty poor strategy. Like, it's kind of like real estate back in 2010, right? Yeah. It's like, this is an asset class that's been here for a while. We've seen a floor, pretty decimated floor, and it hasn't gone much lower. People are holding on. You also saw I'm just rambling on, last weekend when Silicon Valley Bank blew up, $100 billion onboarded onto crypto in like 3 days. $100 billion moved to crypto because everyone was fleeing to safety. Because you're like, well, I don't want my money in a bank account. Okay. So I'm either going to buy bonds, but bonds are being all over the place because of SBB. They're demarking bonds. Okay. So I could buy stocks, but the Fed is raising rates. So I could buy gold or silver. Okay, so gold and silver is kind of safe, maybe. Or I can hold it in my bank account, which maybe or maybe not is safe, or I can buy Bitcoin, Ethereum. And we saw $100 billion get onboarded onto total market cap of crypto last weekend, just on that move, which is pretty interesting. So if you're looking at where capital is moving, we're pretty excited. So you can tell I'm pretty optimistic. We're pretty excited.
I can see the optimism in your eyes and in your pitch. I think one of your lessons you mentioned about that investors are not really betting on the ideas sometimes. Sometimes they're just betting on the person pitching or the person that's excited about the idea. So it's not always. Right. So, Bridger, let's since we're in this topic, this bank situation. So the rates are going up, right? And as far as I kind of see, the Jay Powell I think he's gonna keep going. It's gonna, the rates probably gonna keep going up. Do you see any impact? One is they're trying to take liquidity out of the financial system to some extent. That's basically the reducing inflation. Now, you are in the business of money management where, yourself and your students and, so basically you need the capital. You don't want the capital to be drying out, right? So how do you see this?
Yeah, a lot of different. I could talk for 3 hours on this question. But we'll dive into a few segments here. Okay, so a couple of things. The Fed has announced essentially they want to slow down the economy, right? So they are raising rates. They are doing quantitative tightening. Actually, as of the last few days, the Fed has added a lot of assets to their balance sheet, essentially adding more quantitative easing or QE back into the market, which is adding more liquidity, which is interesting. They have a meeting next week. We'll see if they raise rates again. There's a bunch of speculation. We don't need to speculate there. But the Fed has said we want to contract our economy. And there's 3 rules of investing. Don't fight the Fed. Don't fight the Fed. Don't fight the Fed. Okay. When the Fed wants to do something, they will win. It's funny. We had a big event last night, and my dad actually got up. He's like, I have an economics degree. He goes, typically, what happens when you see high inflation? What happens to the value of the currency? It usually goes down. Like in any country, if you have a high inflation, the value of that currency drops, right?
Yeah.
Not in this case. The US dollar in the last year, we've had very high inflation. We've had 4, 5, 6, 7, 8% inflation, 12-month CPI. The US dollar is at 20-year highs.
Yeah.
Pretty interesting, right? That does not make sense. Economically, how do you have high inflation and yet the dollar is going up in value, right? How does that even compute, right? Don't fight the Fed. Don't fight the Fed. Don't fight the Fed. The Fed is the most powerful organization on planet Earth. You do not want to fight the Fed. So a few things that have happened in the last 12 months. You have Saudi. So if you everything you see in the news, you should think back. How does this affect oil? And additionally, how does this affect the US dollar? Since 1944, we had the Bretton Woods Agreement. This is after World War II. All the nations came together, and the United States came and said, we're pretty much the only country left that's standing. We will pay for a navy to protect all of your shipping lanes around the world, because we're pretty much the only country that has a navy left. We will protect all of your shipping lanes. All we want to do is just trade and do commerce with you, and we'll pay for it for free. Only under one rule: you have to use the US dollar to trade and do transactions in. Just use our currency. And countries were like, that sounds amazing, right? Where do we sign up? Everyone signed up to the Bretton Woods Agreement. And since 1945, the US dollar has been the world reserve currency, and every large transaction around the world in business has been done in US dollars. So it's something called the petrodollar. Is every large oil transaction around the world has been done in US dollars, okay? 4 years. Because what does that do? It creates demand for US dollars. So for example, if, I don't know, let's say Canada is buying oil from Saudi Arabia, they have to use US dollars. If Germany is buying oil from Saudi Arabia, they have to use not German marks or the euro or UN, they use US dollar. And what that does is creates demand for the dollar. They print trillions of dollars, and then people like us work 80 hours a week. Some people, go out and lie, steal, cheat to get more dollars. And then they print another trillion, and we lie, steal, and go out, work 80 hours a week to get more dollars. People can't get enough dollars. They print trillions of them over and over and over again, and people want more and more of them. It's the best-selling product on planet Earth. So if you're the Fed, you need to protect your best-selling product, which is the US dollar. I know they talk about inflation. They talk about the jobs report and stuff. That's all secondary. They need to protect the US dollar. So for example, the last 12 months, Saudi Arabia announced they were considering using the Chinese yuan to trade oil in. And guess what happened? President Biden got on a plane, flew to Saudi Arabia, and I think he swallowed a big pride pill. And he showed up and said, and you don't know what he's going to say. This from my dad actually directly. He's like, I don't know what he said, but he goes, I would assume the conversation goes like this with Saudi Arabia. Hey, Saudi Arabia, we know you're trying to trade oil now, not using the US dollar. How am I, as President Biden, going to go back to Congress and justify us housing 5,000 troops in Saudi Arabia to protect your borders? Oh, and how am I going to justify Congress paying for an aircraft carrier group to protect your ocean and trading lanes from pirates in other countries when you're not using the US dollar? How am I going to stop Iran from doing drone attacks and blowing up your facilities if you're not going to use the US dollar? How am I going to convince Congress to justify spending more money to protect you? It's an interesting conversation, right? Mm-hmm. At the same time, you had Xi Jinping fly to Saudi Arabia and meet with them as well. Yeah. Now, during this whole period, Taiwan was a big chip for China. China said, we're going to take Taiwan. Mm-hmm. The United States parked in, and by the way, we have 14 aircraft carriers. We're going to have 16. They're super carriers, by the way. These are super aircraft carriers. The combined world has 11, maybe 12, depending on what you count. And they are World War II era aircraft carriers. They are about a fourth the size. So ours are 4 times bigger, like per carrier. And we have super carriers. And for one carrier to leave port, it leaves, I think it's like 15 ships leave with it. They have like a battleship, they have a submarine, they have other boats that go with it. It's called an aircraft carrier group for a reason, okay? When they leave port, so we have 14 of those, going to be 16 very soon, of super carriers that float around the seas. So when China said, we're going to take Taiwan, we want to take the chip, all the chip stuff, the United States said, okay, we're going to park an aircraft carrier right between Taiwan and China. And they started doing stuff. So then we parked 2 aircraft carriers there. We then parked a third. We parked 3 aircraft carriers between China and Taiwan in the South kind of China Sea, that area. This is last August. Wow. And guess what happened? Everything kind of settled down, right? And at the same time, the U.S. cut off all chip manufacturing to China. And then I believe went back to Saudi Arabia and said, hey, also China imports, it's like 80% of their energy is imported. And they don't have pipelines. They import almost all their oil from Saudi Arabia through on boats all the way down into the Indian Ocean through Indonesia up to China. If we wanted to cut off, or if they didn't want to use the US dollar, all we do is just park an aircraft carrier right below India. And all of a sudden, China's not getting oil shipments anymore. And in 90 days, all their trucks stop running. I mean, this is the geopolitical game going on right now in the world. Russia, they don't want to use this US dollar either. So what do? Russia does a war. We kind of bait them into a war. We decimate their currency. Their currency dropped crazy in value, the ruble. We then, some way or shape or form, blew up the Nord Stream pipeline. Yeah. Europe is now energy dependent on United States liquefied natural gas. Yeah. Since the war, it's one of the big benefits of the war that no one really talks about. They are almost 100% dependent on liquefied natural gas in the United States. Kind of interesting, right? There's 2 people in history that have tried to trade large amounts of oil without using the US dollar. Umar Gaddafi and Saddam Hussein. And both of them were kind of just killed by the U.S. government. Kind of, not really, but kind of. Okay. Yeah. This is the biggest game on planet Earth. So right now, the U.S. is raising rates. The dollar is going up in value. And I think what they're doing is flexing to the entire world. Oh, really? You don't want to use U.S. dollars? Okay. Go trade in yuan or euros or rubles. If you did that, your currency is worth 20% less than it was a year ago. I mean, this is the Fed is the biggest, baddest organization on planet Earth. They're run by the 12 largest banks on planet Earth. It's a privately held organization that it's kind of not even a branch of the government. It's a private entity. The chairman of the Fed is appointed, is recommended by the president and then appointed by Congress. That's it though. The rest of it's run by the 12 largest banks on Earth. Okay. These are the most powerful people on planet Earth. And they have the power and strength of the United States military behind them. Yeah. Don't fight the Fed. Don't fight the Fed. Don't fight the Fed. So if the Fed wants to contract an economy, they will do it. Okay. Yeah. And don't fight what they want to do. They will tell you. And sometimes it takes them 5 months or 6 months or 12 months, but they will win. Okay. The Fed wins. And I know people are like, the currency's going to reset. Ray Dalio talks about 80 years, currency's reset. Maybe so. And I actually think they're going to reset it into a central bank digital currency. They'll just reset the currency into a central bank digital currency. We'll have a new form of currency, but it'll still be backed by the Fed and the US dollar and all that kind of stuff. And so I digress. I don't even know what we were talking about, but they're contracting an economy right now on purpose, Jerome Powell said he wants to fight inflation. He wants to keep contracting this economy. He wants to make the power of the US dollar strong. And he wants to flood the world with debt that's denominated in US dollars. And those payments are going up in price right now. And I think the US economy is going to get hurt, but I think the worldwide economy will get hurt a lot more.
Yeah.
And typically economic wars precede physical wars. You have China, Taiwan, Iran, you have Russia, Brazil. You have these BRICS nations that are kind of, saber rattling a lot right now. And he said, okay, we're going to raise rates. We'll just hurt all of your economies. Great. Let's see how apt you are to fight a war in 18 months when your economies are, the United States economy will hurt a little bit, but the rest of your economies will be decimated. Kind of interesting. Sorry, I'll stop there.
No, I loved it. Wow, your insight into this is really interesting. I loved it, and I agree with you on this. So, long story short, Fed is gonna keep trying to fight the inflation, so the rate is gonna go up. Now, how do you see somebody managing a real estate fund, right? So let's say they already, there could be many scenarios. If they haven't raised the fund yet, so that's a different pitch to the investors. If they, let's say, already have a fund, they got, let's say, $100 million sitting there, should they start thinking about deploying it right now? Should they wait a little longer, or should they keep consistently doing it? How should they think about this?
Yeah, it's up to every manager, right? I think good deals are coming up though a lot. The funds that I talked about, I have multiple fund managers in my room right here that manage hundreds of millions and billions of dollars of funds. And a lot of them are saying that the deals are starting to come and they're finding distressed deals, people that were over their skis a little bit or had too much leverage, and they are now buying really good deals. Every manager, that's up to the manager's decision though. But I'm starting to see a lot of funds start there. Some are waiting, some are starting to deploy. It just depends on the fund and the fund manager. But in these types of contractions, typically funds are the ones who win because they don't need to borrow from banks with paying 9% interest. They can just capitalize the entire deal with equity and then later just refinance, or they get better bank terms. They can actually price out a lot of onesie twosie small people that run maybe small syndications or just only their own money. They can actually come in and just buy cash or just price out somebody or save a failing business or whatever it is because they have cash. Yeah. The cash is the best thing to have in a time like this because deals come up and you can, kind of save or come in and find distressed entrepreneurs and business owners and investors and come in. That's why typically funds that are started right or near a recession are some of the best performing funds of all time because it's actually, I saw this whole study, vintages of funds across the board. Funds that started in 2008 had incredible returns. Funds that started in 2001 during the dot-com bubble had incredible returns. The vintage of the fund actually was very interesting as the performance returns over the next decade. So I'm actually very excited. Funds that are launching right now and deploying right now. Again, we don't know it on a perfect crystal ball, but historically speaking, during a contraction period like now, I don't know if it's today or tomorrow or next month or 6 months ago, whenever, but during kind of around about this time is usually a very good time to deploy. And you got to make your own investment decisions, find good deals, obviously. But that's what we're seeing.
So, Bridger, the other thing is, you get to see so many deals from your students, from so many people, and your internet personality. Anybody's looking for you. You're all over YouTube, all over the internet. So a lot of people probably sending you deals. So you see a lot of these deals coming across your desk. And how do you? And then you're also partnering with fund managers, right? So when you're partnering with somebody, or you're helping your students find a partner. Let's say they have fundraising skills, but they need a person to deploy the funds, the investor side of things. Or how do you kind of see what are the characteristics you see that you recommend? Okay, I want to see these characteristics at least when I'm looking for a partner, or when your students are looking for a partner.
A couple of things on partners in the fund game specifically. I try to find someone who's deeply honest. You should not be in this game unless you have a deep sense of honesty, in my opinion. Yeah. You will go to jail. You'll mismanage. You'll steal. You'll something. Because guess what happens in a fund? Things are compounded by $100 million or $1 billion. And if you are dishonest or don't have integrity or kind of rub some numbers a different way, you will commit fraud. And so I make sure our students, I talk to people a lot. I say, if you in the past had a propensity to kind of just wash through some numbers or don't share reports correctly and stuff, don't get in this game. You will go to jail. You'll go to jail for a decade. or 2 days, whatever it is.
Wow.
Like, just save yourself the headache and do something else with your life.
Yeah.
Now, so if someone's deeply honest, though, this is a great game for you. The second thing I'll see is deep levels of due diligence. Now, it depends on their job role, but deep levels of, there's a lot of people out there that are just, and it's okay, but they're just so flashy, and they always are just like, everything's going to work out great. It's optimistic. Like, and like every deal's a great deal. Every deal's a home run. Every deal is perfect. It's like, really, the top funds I talk to are they scrutinize like crazy. They do, out of 100 deals, they do 5, right? And they vet and look through 95 deals very well to find the 5 that are good, and, I meet a lot of people that are just, every deal's great. Yeah, we're all going to make money. Yeah, let's just go do it. Like, which is fun to have in a business, and you need some of that. But at the same time, I want to find someone who's really deeply honest and has a good eye for due diligence on deals and also due diligence on people. Someone that can do very good due diligence on people and look at background checks and just look them in the eye and say, is this person really shooting me straight? Are they honest? Because we are in an industry where there's a lot of dishonesty, and a lot of people that, rub numbers and are trying to sell a deal or get something done, and they'll just rush something by. And you need a lot of that. So that's what I preach. If I'm looking at characteristics of people I want in my business and people that I want around me, those are the 2 main ones.
Oh, that's so important. During this, there was so much money around. A friend of mine, he also runs a software company. He invested in a hedge fund, or I think real estate fund, run by a guy, and he told me to invest as well. And one of the pitch, I looked at it, I'm like, whose car is this? What picture is this? He showed me a Lambo and a couple of these. Oh no, this guy's very wealthy. He's the fund manager. He has this Lambo. I'm like, let me wait a little bit. I don't think I'm ready for investment right now. Guess what? A year later, now they are into lawsuits. The guy ran away with the fund and all kinds of things going on. He created amendments on the PPM. He forged the signatures and things like that. The FBI involved. I'm like, oh, thank God I saw that Lambo. Otherwise, I would have been.
Yeah, it's funny. Almost nice cars like that almost. And I like cars. I like cars more than I love cars. Actually, they're fun and stuff. But it's funny, the more flashy someone is, the more it seems like they're compensating or coming up for something. And I tell my students, and people that are listening maybe have never invested in a fund, just a few pieces of advice from me. Make sure they do third-party audits. Make sure they have a third-party administrator on their fund. I'm an investor in multiple funds. I like investing in funds. I think they're fantastic, actually. I love it. I'm an investor in 2 real estate funds. I don't have to worry about tenants and termites. They just run them, and I get to be in these huge, big multifamily funds. It's awesome. And guess what? They do audits, and they do third-party administration, meaning a third party comes and checks every single one of their numbers. Most of the people that are fraudsters or like Bernie Madoff, people ask him for an audit, and he'd say, I don't do audits. If you want an audit, go somewhere else. For 30 years, he never had an audit in 30 years. And he just said, just trust me, dude. Like, that's essentially what he said. We make 1% a month. If you don't want that, go somewhere else. I'm the president of the NASDAQ. I'm so big, whatever. And, I have a rule, man. If I don't see a third-party audit or an admin or both on a fund, I'm like, hey, I'm out. It's just not for me. Maybe other people will do it, just not for me, because I'm not going to just take your word for it, because everyone's honest until mom gets cancer and treatment is $1 million overseas. And sometimes you're honest until, man, well, I need to borrow $1 million from my fund to maybe go save mom. And all of a sudden they do. Now that's one example. They do something like that.
Yeah.
And they're justified in their own brain. And all of a sudden they committed fraud and they committed a felony. And with third-party administrators, you can't even do that. It's not even possible to do something like that. And so I make sure to see that on every fund I do. And anyways, that'll help you. And by the way, I know we talked doom and gloom. There's lots of bad, but there's also tons of good. There's a reason.
Yeah.
Funds are incredible vehicles. So
I've seen one of your videos recently, Veena Jetti. I think she raised $50 million or something.
Oh, yeah.
And she's also coming to your program, the fund launch. So we talked about.
She's speaking at Fund Launch Live. It's gonna be awesome to have her there. Yeah, she raised $50 million in 8 weeks.
Wow, that's crazy. So, Bridger, we talked a lot about the economy and general stuff. Now let's talk about the Fund Launch Live. That's an incredible thing you're doing. You have this incredible lineup of amazing speakers, and the whole setup. The other day, I think I had tickets, and I think you gave out the diaries with your wireframe bull logo and things like that, the IFS. So I saw one of that on my car. I was like, where did that come from? And then I see investment fund secrets. I'm like, oh, that's Bridger. And it's been a year I have seen that. I was like, okay, wow. So this year you got this incredible lineup. So tell us a little more about that, what to expect and things like that.
Yeah. So Fund Launch Live, there's again, like online, there's nobody that teaches funds. There's no one that talks about funds. There's no one that even does anything like this. And that's why we started this company. And we were like, man, we should do an event where we get some of the best fund managers in the world. And people also not just the best, but also people that started funds from like kind of weird scenarios. One of our speakers, he was a pharmacist 4 years ago, and he started to learn how to trade. He just raised 10 million. I think they're at $12 million now. They've onboarded in like a year. He's a trader, was a pharmacist, now runs a hedge fund. We have another guy that's 27 years old, runs a $100 million fund. He come to speak. We just have people from unique backgrounds and situations that are speaking. Like Veena Jetti, dude, she had an incredible background and situation. Now she runs a multi-$100 million fund, and she's an Indian woman that grew up in Colorado, now in Texas, and just has this awesome story. And it's like I think more people should learn about this game. This has historically been the game of you had to go to Harvard to learn how to do this, or work on Wall Street for 20 years to learn how this game is played. And now, like regular people like me and you, I love, democratization of funds is what we're doing. We're letting regular people come and learn how to launch funds. So our event is actually very targeted. It's called Fund Launch Live for a reason. We help people launch funds. It's not just some general business conference. Like we have speakers flying in, and we do a lot of everything's around funds, whether it's raising capital, small micro funds, multi-billion-dollar funds, economics, where like the world is going from some of the top minds in the world. And we have funds that are started. One of the guys come to speak, they went out and bought restaurants. So they found local restaurants that were good. They bought them up and put them together and scaled them. And now they run this huge like empire of restaurants, and they keep finding like these small restaurants that are really good. They buy them up and then they make them into 50 locations. Yeah. It's like, you can do this. Regular people can do this. And it's phenomenal. So that's the goal of Fund Launch Live. And last year's was phenomenal. This year, I'm so excited. It's not a pitch fest. It's not like we try to provide a ton of value, and it's a 3-day event. We go like all out. We've spent a lot of money on AV and making it like a cool show, and just making like it just like a full experience. Yeah. And for your team or whoever wants to come, it's I don't know. I obviously I think it's pretty cool, but we go all out for it. It's pretty fun.
Yeah, this is, and the thing you brought up, the important thing is so many people teaching different things online and different events, real estate, this, that. No one is talking about fund, because no one actually knows this, and if they know, they keep it to themselves. You are probably one of the very few, I don't know whether there's anybody else, but people that gave out so much information for free online, all over YouTube, all over the place, that, I watched your YouTube, I was like, wow, okay, these are secrets he's just giving out, plain and simple. This is very, and that's why I asked you in the beginning, like the educational piece of it. It's you're sharing a lot of secrets though, but I think it has that mental fulfillment that, okay, I'm doing something good for the society instead of just doing it for myself. This is so Bridger, you have so you are running funds, then you have the IFS, the training system, and then you have the Fund Launch Live, where you help students launch their funds from fund in a box kind of thing. The other thing, I run a software company, and I run a couple of them. All of them are fully owned by me, and I thought, what if I use Bridger's idea of, I think you talked about the funeral homes or something like that, so you buy up your competitors. And that's why I kind of looked into the funds, that's pretty interesting, right? Instead of giving out equity. Because a lot of people said,
it's fun to go buy your competitors, and then you contract yourself back from the business, which is pretty cool. It's a cool concept people are using now to essentially just take over an industry, right? To have a monopoly or take over an area. You keep your existing business, start a separate fund that buys your competitors' businesses, and then you put your branding. They hire you to run the business, and you run it all, and then you put your branding and everything you own. Essentially, these businesses is pretty cool.
If you guys want to find Bridger, he's all over the internet. Just search Bridger Pennington. He's all over the place. And thank you, Bridger. I really appreciate you coming on the show. And we got to meet sometime whenever I fly down to Utah or in Miami.
Yeah, just come out to Miami. We'll hang out at the event in a couple months. It'll be really fun.
Perfect.
Tom, you're amazing. Thanks so much for having me on.
Thank you.
Yeah, thanks.
Thank you, Bridger.